This is Mac OS Ken.
A stellar December quarter for Apple, robust guidance for the March quarter, and analysts do the reaction thing. It is Monday, the 2nd of February, 2026. I'm Ken Ray, and this is news from Mac OS Ken, brought to you by yours truly and sponsored by NordLayer. Secure your network, block threats to your business, and save with offer code macOSKen-10-NordLayer at nordlayer.com/macOSKen. This show is also sponsored by Copilot Money, designed to make your money feel clear, calm, and fully yours. Any time is the right time to work on financial health. Copilot Money is there to help all the time. Right now, sign up at try.copilot.money/macOSKen and get a 2-month free trial with offer code macOSKen. The Copilot Money dashboard is where you start. It lets you view new transactions, budget categories, recurring charges, important stuff to keep an eye on. While Copilot Money features AI-powered spending categorization, the fully customizable categories, rules, and notifications let you tweak the app to exactly what you need. And you can use it anywhere, with apps for iPhone, iPad, and the Mac, as well as a beautiful new interface on the web. Copilot Money has been featured by Apple for its gorgeous design and as a smart way to save money, and it is there to help. Get a 2-month free trial with offer code macOSKen at try.copilot.money/macOSKen. That's try.copilot.money/macOSKen for your 2-month free trial with offer code macOSKen. Copilot Money, your money beautifully organized, now across every device at try.copilot.money/macOSKen. By now, you've probably heard about Apple's stellar December quarter numbers. I was almost completely disconnected from Wednesday through Sunday, and I heard about them, and I was almost completely disconnected. Last week, the Street was said to be looking for revenue for Apple's December quarter of $138.47 billion on earnings per share of $2.67. That would have handily beaten the previous record of $124.3 billion on earnings per share of $2.40, set for the same quarter a year earlier. Yeah, Apple beat the year-ago quarter and the Street's expectations. According to a Thursday press release, Apple posted quarterly revenue of $143.8 billion, up 16% year-on-year, on earnings per share of $2.84, up 19% year-on-year. They not only beat previous records and analyst expectations, they also beat their own expectations, according to comments from Apple CEO Tim Cook on last Thursday's earnings call. iPhone set an all-time revenue record of $85.3 billion, up 23% year-on-year. Apple CFO Kevin Perek noted all-time revenue records in both developed and emerging markets, with double-digit growth in a majority of markets tracked by Apple, including Greater China, India, Japan, Latin America, Western Europe, and the US. Sales of that, plus other stuff, pushed Apple's installed base of active devices over 2.5 billion units. And you thought people liked them before. The latest from 451 Research shows satisfaction with the iPhone 17 line in the US at 99%. Revenue for the Mac was down, as expected. That fell 7% year-on-year to $8.4 billion. Expected, as I say, due to the tough compare. The first quarter of fiscal year 2025 offered consumers a number of new devices, including the M4 MacBook Pro, Mac Mini, and iMac. Last quarter offered no such lineup, hence the tough compare. They still track growth in emerging markets, though, including in Brazil, India, Malaysia, Vietnam, and others. The Mac install base reached another all-time high, according to Apple CEO Tim Cook, with nearly half of customers buying a Mac last quarter coming new to the platform. and satisfaction is stellar. 451 Research responders in the U.S. gave the Mac a score of 97%. Want to talk about iPad? Revenue for Apple's tablet hit $8.6 billion, up 6% year-on-year. That was thanks in part to an all-time record for upgraders, according to Cook. Not that it was all down to them. In fact, said CFO Parekh, over half the customers who purchased an iPad during the quarter were new to that product. So, of course, the installed base hit a new high, and yes, people dig them. Customer satisfaction's at 98% in the U.S., according to the 411 from 451. Wearables, home, and accessories bring us to Mr. Sad Trombone. Revenue for that segment was down 2% year-on-year, marking one of the rare times that taking in $11.5 billion sounds sad. The good news, it was not for lack of demand. CFO Parekh says Apple experienced constraints on the AirPods Pro 3 last quarter. If not for those, they think the category would have seen revenue growth, not shrinkage. And the wearables installed base reached a new all-time high, and people like Apple Watch to the tune of 96% and blah, 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 blah. Back to Mr. Happy Trombone, I guess. Services hit an all-time revenue record of $30 billion, according to CEO Cook, up 14% from the same quarter a year earlier. That segment, made up of many smaller segments, saw revenue records in both developed and emerging markets, with all-time revenue records in advertising, music, payment services, and cloud services. And with an installed base of over 2.5 billion active devices, they're pretty optimistic about continuing to grow those segments. Turning to Apple's business with business, CFO Parekh said the enterprise, the boring tall buildings one, not the cool one with the spaceship. Yeah, the enterprise saw organizations continuing to expand their fleet of Apple devices. Snowflake's running over 9,000 Macs. AstraZeneca is adding over 5,000 M5-powered iPad Pros to its pharmaceutical sales team. And Mexico's largest domestic retailer, Coppel, uses over 10,000 iPads and just threw in a slew of new MacBook Airs. What's next? Another beaten. In a good way. CFO Parekh said the company expects March quarter revenue to grow between 13% and 16% year-on-year. That is apparently a tough number to pin, though, thanks to ongoing iPhone constraints. Services are expected to grow about 14%. Gross margins expected to be between 48 and 49%. Operating expenses will likely be between $18.4 and $18.7 billion, similar to the December quarter. That is higher than years past, driven by higher research and development costs. Closing his prepared remarks, CEO Cook said the December quarter was in so many ways a remarkable quarter for Apple, and we're excited for all the opportunities we'll have in the year ahead to deliver innovations that have never been seen before and enrich the lives of users every step of the way. What are you thinking? AR headset? A car, maybe? I kid because I'm heartbroken. With the call open to questions, Evercore analyst Amit Daryanani was first out of the gate with a question about, what's that thing? You know, that component that everybody's worried about? Right, memory. How did the current memory crunch figure into guidance? How do you feel about securing the memory you need? Just go, man, go. Yeah, remember how I said that they weren't going to answer questions they didn't want to answer? From a memory point of view, said CEO Cook, memory had a minimal impact on the Q1, so the December quarter gross margin. We do expect it to be a bit more of an impact in the second quarter gross margin, and that was comprehended in the outlook of 48% to 49% that Kevin gave earlier. Beyond the second quarter, we don't obviously provide outlooks beyond the current quarter, but we do continue to see market pricing for memory increasing significantly. As always, we'll look at a range of options to deal with that. So hopefully that gives you the full view. Morgan Stanley analyst Eric Woodring wanted help understanding the revenue upside potential that exists with AI, especially since, Apple competitors have integrated AI into their devices, but it's just not clear yet what incremental monetization they're seeing. Hey, remember how I said that they weren't going to answer questions they didn't want to answer? Quoting CEO Cook, let me just say that we're bringing intelligence to more of what people love, and we're integrating it across the operating system in a personal and private way, and I think that by doing so, it creates great value, and that opens up a range of opportunities across our products and services. Okay. Goldman Sachs analyst Michael Eng tried to get the execs to say why current quarter revenue is expected to grow by as much as 16%. CFO Parekh said, it's just continuation of the strong cycle Apple's seeing, subject to the constraints mentioned earlier in the call. B of A analyst Wamsi Mohan burned one of his 2 questions, asking whether Apple might eventually have to raise prices on iPhone to compensate for higher memory costs. I wouldn't want to speculate on that one, said Cook. Now, there was an interesting back and forth between Cook and TD Cowen analyst Krish Sankar. I think it was TF International analyst Ming-Chi Kuo who said last week that despite rising memory costs, Apple could keep prices for its devices where they are and grab market share from smaller competitors who aren't as well positioned in the supply chain. So on last week's call, Sankar asked, given the memory constraint or commodity scarcity is impacting both the smartphone and the PC markets, and Apple arguably having more purchasing power, do you think this is a chance for you to increase your market share both in iPhone and Mac at the expense of competition who might have more constraints in getting access to memory? Yes, said Cook, but in many more words. Yeah, he said, I don't really want to talk about kind of what has happened, and we do believe, as I had shared, that iPhone gained share in the December quarter, and if you look at Mac for the full calendar year of 25, we also believe we gained share, and so we feel very good about our position. Just say yes. Just say yes. Seriously, just say yes. I mean, is it that hard? Really? Just say yes. I'm not going to say that I rushed this recap, but I do want to hit both the call and analyst reaction today. I've already got more than a full show's worth for Tuesday's show, and Monday hasn't even happened yet. The point is, more happened on the call than I have hit here. As usual, you can hit a replay of the call on Apple's investor page. That'll be there for the next couple of weeks. You can also download a podcast of the call, yours to cherish as long as zeros and ones still hold. And mad props again to 6 Colors for their transcript of the call. You can find that at 6colors.com. We'll get to some analyst reactions here in a moment, but first a word from today's sponsor, NordLayer, a toggle-ready network security platform built for today's business. By which I mean your business. NordLayer combines VPN, access control, and threat protection in one easy-to-use platform. You don't need a lot of new hardware, though. It is a layer of security added to what you've already got, whether that's Windows, Mac, Linux, or a mix. And yes, it protects mobile devices as well. They partnered with CrowdStrike to bring Falcon endpoint security to small businesses and mid-sized businesses. That is your business getting enterprise-grade security that, yes, is still simple to deploy and manage. From small shops to bigger teams, you can add users, features, or servers in just a few clicks, starting as low as $8 per user per month, with special rates for teams with 100 seats or more. Quick deployment, step-by-step onboarding, 24/7 support. NordLayer stands ready to guard your business. And they have an exclusive offer for you. Get up to 22% off NordLayer yearly plans, plus 10% on top with offer code MacOSKen-10-NordLayer at nordlayer.com/MacOSKen. Try it risk-free with their 14-day money-back guarantee. NordLayer, toggle-ready network security built for your business. Get savings on top of savings with offer code MacOSCan-10-NordLayer at nordlayer.com/MacOSCan. Between the stellar quarter and the robust guidance, you'll not be surprised to hear a few targets went up since last week's call. Apple 3.0 gathered several analyst notes. Rosenblatt's Barton Crockett, Maxim's Tom Forte, and Jefferies Edison Lee all have hold ratings on Apple, but all raised their targets. Barclays analyst Tim Long, who has a practically inexplicable sell rating on the shares, even raised his target from $230 to $239. As for analysts more bought into the Apple story, Goldman Sachs' Michael Eng was turned on by better-than-expected iPhone global demand last quarter, particularly in China, where Apple revenue increased 38% year-on-year. While current quarter guidance was better than anticipated, it would have been better still if not for component constraints. He likes the higher-than-usual operating expenses this quarter, probably means AI investment in his estimation, and gross margins look groovy. Mr. Eng has a buy rating on Apple shares. He has raised his price target on the shares from $320 to $330. JP Morgan analyst Samik Chatterjee thinks last quarter's results and this quarter's guidance should calm investor nerves. He's got an overweight rating on Apple shares. He raised his price target on those from $315 to $325. The Mixed Message Award goes to Morningstar analyst William Kerwin. Apple posted stellar December quarter results, says his note, and March quarter guidance implies continued high growth and further margin expansion. iPhone growth was stunning, and Apple is benefiting from a strong refresh cycle in 2026, driven by pent-up customer demand. He was also impressed by profitability, and so he puts a fair value on Apple shares of $260, up from $240. Apple starts the day at $259.48, so a well-earned Mixed Message Award. Some analysts don't even seem to understand their own ratings themselves. Take KeyBank analyst Brandon Nispel. Quoting his note, demand is clearly strong for the iPhone, particularly in China, which can be somewhat boom or bust. And while we think growth will slow, at this point Apple shares appear likely to grow right past our more near-term concerns. In addition, our concerns around lower margins for rising memory costs are likely to take a back seat, given strong product services mix and Apple's pricing power. Despite saying they are likely to go higher, he can't see them going higher. Sector weight, no target, because people are funny. And finally, Deepwater analysts Gene Munster and Brian Baker don't do the whole target thing. That said, they think Apple's shares are not getting the love they deserve. The way they see it, the muted stock reaction is largely because investors want more clarity on when and how AI will impact the business. History suggests Cook will deliver the AI goods in the form of the first must-have AI devices, likely starting mid to late this year. In the meantime, investors can sleep well at night knowing Apple customers remain loyal. Customers are more than satisfied, as evidenced by device growth, margins, and revenue momentum into March and June. Investors, however, remain in wait-and-see mode on AI until Apple provides clearer substance or demonstrates its capabilities in market. I expect this tension to persist, even as fundamentals continue to perform. So, while I was away, missing one blessed episode, Apple made its second largest acquisition to date. We'll take a look at the Q.AI deal tomorrow and catch up on other Apple news as well. macOS Ken, brought to you by me and sponsored by Copilot Money. Get a 2-month free trial with offer code MacOSKen at try.copilot.money/MacOSKen. This show is also sponsored by NordLayer, toggle-ready network security built for your business. Get savings on top of savings with offer code MacOSKen-10-NordLayer at nordlayer.com/MacOSKen. Advertising handled by Backbeat Media, online at backbeatmedia.com. You can find me on Mastodon, MacOSKen at mastodon.social. You can also send me an email, info@macosken.com. Until next time, that is news from macOSKen. I'm Ken Ray.
Ciao.